So I think we are ready to start. Ladies and gentlemen, welcome to today's fifth knowledge exchange session on central bank digital currency and cryptocurrency. Our webinar is supported, organized by the Central Bank of Jordan, as well as GIZ with the support of Apex Consulting. And we are very pleased to welcome you all. We're looking forward to 1.5 hours of interesting discussions on the topic of how can digital financial services and central bank digital currency especially support financial inclusion, not only in Jordan, but also beyond the country. We're very happy to see so many registrations not only from Jordan, from other countries and organizations. But before we start with our contents, I would like to introduce you to some housekeeping rules that we have, meaning how to use the technique that we use for the webinar. I've shared my slides so you can follow what I'm saying currently. Please, when you log in, you're being asked to choose your language. We have a simultaneous translation from English into Arabic. And if someone speaks Arabic, also vice versa. So please make a choice accordingly what your mother tongue is. And then you can follow in the menu all explanations, all discussions. You can find the menu in the small button on the top of the screen. There are 3 dots. It's written more. And if you click on that, then you can make your language choice. Furthermore, we will have discussions in the webinar, and if you have questions to the speakers, please put them into the chat. You can find the chat icon also on the top bar. It has a frame here. It's marked in yellow. And please put your question into the chat, and we will take this up and at the right time then address it to the speakers so that you can find an answer. We will use throughout the webinar polls. That means that the speakers will show the deck of slides, and you will be encountering a question. The question is for you, and you have an option for choices. It's usually a multiple choice. It might be also a single choice question, and the result will be displayed immediately on the screen. If you're using a mobile phone, that might be to some extent impeded due to the technique, but it should be accessible with a usual computer as well as a tablet. So please participate in the polls. That would allow also the speakers to reference a bit their elaborations on the feedback that you give. Today's agenda, of course, we will have a welcome introduction also for the speakers. We have keynote speaker presentations to our topic and a moderated discussion followed by Q&A. So as I mentioned, please, if you have questions, put this into the chat. We will take this up for the Q&A session. And of course, a conclusion at the end of the webinar. In the end of the webinar, we will also kindly ask you to fill a short evaluation question. The link will be sent to you so you can have it easily accessed through the application or also by an email link afterwards. We will make a recording of the webinar so that everyone who participated and registered with an email will also have the opportunity to review it later for important parts. Last but not least, I would like to introduce the moderation of the session. Ziad Al-Rifai, he is our co-moderator supporting us. He was an executive director of ESMAR for Islamic Finance Organization. And he is an accredited microfinance network trainer for Arab countries, Sanabel. He's ILO certificated and EFQM quality certified expert. In 2006, Ziad joined the Jordan microcredit company Tamwilcom as an executive director, and he is, as a consultant, very well known in the whole region. So welcome, Ziad. Thank you for your support.
Thank you. Pleasure, all the time. Wishing you the best. Thank you.
Thank you. About myself, my name is Branko Wienert. I'm working as a freelance consultant, but also for German Sparkassen Stiftung Foundation. I'm based in Tbilisi. I have been working for several development implementation organizations like GIZ, but also for ADB, and currently for the Sparkassen Foundation. And my core topics of interest are, of course, ESG, financial inclusion, digital financial services, and regulatory aspects. Before we dive into our session today, I would like to invite Mrs. Catherine Damian to give us a short welcome note from the side of GIZ, because GIZ is the supporter of this webinar for us all. So I will unshare my screen. The floor is yours, Catherine.
Yeah, hello. Yeah, it's so nice to see faces and also like all the attendance. So yeah, now it's 51. I think it's very good. And I think I'm also super excited for this webinar, because I mean, since years everyone is talking about cryptocurrency and Bitcoins, but how can we use it for financial inclusion? So what's why it can be interesting for financial inclusion? And some of the central banks already internationally started with their own digital currency. So it's interesting to see what's going on there. So it's still a kind of new topic, but it's really interesting, and I'm super happy and excited for speakers. And who knows DigiSense, of course, knows that we are happy to have Matthias there, who was part of DigiSense. So it's it's really nice to have, and of course also for the other speakers. But it's really nice, and I wish you all an enjoyable time, and I'm looking forward for the exchange during the webinar.
Thank you, Catherine. So I think with that we are well set and to start. Thank you, Catherine, for your input and your warm words. And today's topic is about central bank digital currency and cryptocurrency for financial inclusion. So all of us have heard probably about lucky investors who made their fortune with Bitcoins. Some might be today among us as well. But I think also we have heard about stories of those who lost everything. So cryptocurrency is being also perceived as a risky investment, as a risky tool for payment and finance. And the question may arise, why should a central bank invest into cryptocurrency? How close does this bring us to the gambling sector? I'm putting now some provocative questions, and I'm sure that we have a lot of answers in our presentations today. And I'm happy to introduce our distinguished speakers for today, who is Mr. Matthias Poser. He is Technical Advisor of the Competence Center for Financial Systems Development at GIZ. Welcome, Matthias. We have Mr. Barlam Ebanoidze. He's Head of FinTech and Supervisory Technology at the National Bank of Georgia. Welcome, Barlam. And presenting later to us the case of Georgia, the central bank. And we have today with us Mr. Finn Gerlach. Welcome, Finn. Finn is the Head of Digitalization and Payment Law at the German Savings Bank Association, DSGV. And he has 16 years of extensive experience in the field of banking, fintech, capital markets, and payment law, as well as consumer protection law. He's an in-house lawyer for the German Savings Bank Association and has a team of lawyers advising approximately 400 savings banks. So there's significant amount of knowledge available. He chairs the working group of CBDC at the German Savings Bank Association, and represents German Savings Bank in several European expert groups, like the Legal Support Group of the European Payment Council or the FinTech Regulation Committee on the European Savings and Retail Banking Group. So, Finn, I think you can you would enrich our discussion through your practical insight and from also the practical discussion in Europe itself. And I would like to invite you to have your presentation, and there will be also a short poll during the presentation itself. So please indicate when we have reached that level. So the floor is yours, Finn. Please start.
Can you see my screen?
Yes.
Yes,
all
perfect.
shared.
Okay.
Thank you. Thank you for the warm welcome, Branko. Hello to everyone from my side as well. I want to spend the next 15 minutes giving you a first idea of the CBDC of Europe, at least what has been discussed so far, because obviously it's a moving target. But we want to take a first look, and I think it's important, as Catherine already mentioned, to learn from experiences around the world. Next slide, please. Next slide. Before I want to go into the detail of the design of the digital euro, let's have a quick overview of what's going on worldwide. So we're seeing that 130 central banks worldwide are exploring CBDC solutions. And also it is a very strong buzzword currently. Most of these countries are far away from actually issuing a CBDC. And the same is true for Europe, actually. The European Central Bank has been in a so-called investigation phase for 2 years now, exploring the design of the digital euro, and is now moving towards a decision stage coming in October this year, where they will decide whether they go into a preparation phase, as they call it. Meanwhile, also the European Commission, the legislator, has issued a first draft proposal of legislation on which grounds a digital euro could be issued by the central bank, because obviously the central bank is not a democratic institution that is being elected by the people, so there needs to be a democratic feedback. Also, I want to highlight the differentiation between retail CBDC and wholesale CBDC. So for the next slides, I will be talking about the retail CBDC aspects. I will touch upon the wholesale a little bit later on. Next slide, please. I think, Branko, you will take over the poll question.
Yes, thank you, Finn. So here we have reached our first poll, and I hope that the technology will play with us. You can see the question on the slide, but also on the screen in front of you. Considering what you've heard about CBDC so far, which of the following statements would you agree with? You can choose several answers. First one, I can clearly see the benefits and necessity of CBDC in my country. B, I don't think that CBDC will be used much because there are already private sector solutions that cover every use case of digital payments, like Apple Pay, like credit cards, like PayPal. I'm concerned about the usage of CBDC because I fear that it is not as anonymous as cash. Or D, I'm worried about introduction of CBDC because it is its potential and impact on financial stability. So please make a choice. And click on submit, and then we would see the results coming in. Let's give some seconds more so everybody can think about the questions and the answers. So we have a competition between option 1 and 2. While option 1 is now with 38%, I can see clearly the benefits and necessity of CBDC in my country. Now it's on par with the second one. I don't think that CBDC will be used much because there are already private sector solutions. And CBDC, the second question now gains more. So we are with 41% already with the second option. 24 respondents out of 53 participants. Good. I think this gives a good impression, Finn. So we have option 2 winning. So there's some skepticism towards the background of the existing solutions already. And CBDC may have it a bit more difficult than we might have thought. Thank you very much. So we can close the poll.
Thank you so much, Branko. That's very interesting insight actually from your part, because now I want to talk a bit about the benefits CBDC might have from the perspective of the European Central Bank. And there are a lot of benefits being seen, but I want to actually sum them up into 4 aspects. We have to understand where the CBDC debate and exploration is coming from. So we've seen private sector stablecoin initiatives such as Libra or Diem by Meta, formerly known as Facebook. And I think a lot of European, or not of European only, but worldwide central banks feared that a private sector payment solution would take over and diminish the meaning of the national currency. So that was one aspect why the CBDC investigation was strongly progressed. But at the same time, and this is probably pretty close to the first aspect, we've also understood even more nowadays that payment is a very critical infrastructure for the functioning of a society and so on. So obviously there's a strategic interest in having an independent and autonomous infrastructure in Europe. And what we see at the moment is that we have a huge dominance by foreign payment like, for example, the international credit card companies like MasterCard and Visa. So there's the interest of having a strong European payment system installed as well. Then there's this obvious aspect of addition to cash. We have member states of the European Union, such as Sweden, where hardly any cash is used anymore. So also there's the interest to have an acceptance everywhere of a national currency. And finally, and this is the thing that makes it maybe so interesting, especially for this webinar, the financial inclusion aspect. So for the European Union, I don't think it plays a huge role. There are underbanked people in the European Union as well, but most of the people have access to a payment account as of today. And there's other legislation guaranteeing everyone a payment account access. And we've seen, especially, for example, with the Ukrainian refugees lately, that it works very well. For example, in Germany, our organization alone have served many hundred thousands of Ukrainian refugees without any problem. So it's a question whether this is a communication aspect, a political aspect, why the European Central Bank is mentioning it. But for the European Union, I think it plays a rather negligible role. Next slide, please. So let's take a look at the first findings and the design of the legislative proposal that's been issued in June. Next slide, please. Next slide, please. I can't see the next slide yet. Yes, thank you. So at first, a very obvious one, the legal tender status of the digital euro. Legal tender meaning that the money has to be recognized for the satisfactory of any monetary debt. So it has the same status as euro cash. And also that was accompanied by the mandatory acceptance obligation, meaning that every merchant Europe-wide has to accept the digital euro once it comes into force and is issued. So that was being expected. But how does the digital euro come to the people? The idea is that the current payment service providers, so the banks basically, as intermediaries, provide the digital euro. Every payment service provider has to offer a digital euro account next to the regular payment account. That can either be done by an own app, for example, an application, or also the European Central Bank will probably offer an own application and the customer can then choose which one he wants. Also, the payment service providers will be obliged to provide basic functionalities, such as the maintenance of the account and obviously serving transactions, because what you want to do with it is obviously pay. But it also, as a basic feature or a basic functionality, the European Central Bank and the legislator understand the conversion of digital euro into cash. And the banks will not be able to charge any of these services towards the customer. So for the customer, for the citizen, it's absolutely free. But then you wonder, why would the banks want to do this? How are they still going to earn some money? And this is where I come to the next point, the compensation model. The idea is that the money or the fee has to be paid by the merchant, who probably has the most benefit of a European-wide acceptance network. So the fee that is paid by the merchant will be split between the bank on the payer side and the bank of the payee side. But this fee will be sealed and will not be able to be over a cost-oriented price. So we see a cap by legislation on the potential fee. And obviously, that will be a huge debate in the ongoing legislative process, whether the costs will be compensated by this fee model. Another aspect that is of, let me add this one thing. The idea of the European Central Bank is also to boost innovation. So they think that with the digital euro, the private banking sector will have the possibility to have add-on value served to the customer. And these add-on values, services that go beyond the basic ones that I just mentioned, those can be priced. So, however, being from the financial sector, we are still wondering what these innovational services could be. So I think that will also be part of the debate. The next aspect is, I think, of major importance, especially maybe for your region and for the discussion of financial inclusion and of the way states can pay money to their people, for example, with state aid or anything, or social assistance. The European Union decided that the digital euro will not be programmable money. And this is also a hint that technology-wise, it will not go towards blockchain, and it will not be a tokenized digital money, which is a bit surprising because that would have been the main innovative factor. So it will be a simple bank account-based payment scheme, if you want so. However, the legislation foresees so-called conditional payments, which come very, very close to programmable money. But the difference is that the parties have to agree on the conditions when the payment transaction is automatically proceeded. So I think that's the difference to programmable money, where the state would by themselves define the conditions under which the payment is proceeded. Then we have the aspect of holding limits. It's also a very highly debated aspect, and it touches upon the aspect of financial stability. Imagine you're having a bank account and you're not sure whether your bank will make it in a financial crisis or anything like that. You would probably always try to put your money within digital euro as much as you can, because you figure the central bank will never go bankrupt. So banks are very scared that the customers will take all their money from their bank account and put it into digital euro account, which means they lose liquidity, which means they lose their ability to function also as someone giving loans to the economy. So that's a big issue. The way the legislator tries to solve it is they give a mandate to the European Central Bank and tell them to have a huge impact assessment on this aspect, and to keep in mind, bear in mind the several aspects that they define within the legislation. Then also, digital euro, there's no remuneration for it. So you won't be able to pay, or it's not allowed to have an interest rate on your digital euro account. That's also an aspect to not make it too attractive that people are not putting all their money in digital euro accounts. Then, and also a very politically debated aspect is privacy. So can the government or the European Central Bank trace my spendings? And to make it as much cash-like as possible, they foresee an offline transaction, meaning that you can pay, for example, at the point of sale. So in a nearby situation, you can pay offline with a digital euro without anybody seeing what you've bought or with whom you made the contract. Obviously, and there's the next aspect, this is being also kept because we have anti-money laundering laws, and we don't want people to spend thousands of euros on on money laundering in the end. So there's going to be a cap on the offline transaction as well. I think that sums us up for the design of the digital euro. Once again, this is a moving target. So we're only in the stage of the first proposal of the European Commission. Next slide, please. And finally, I want to make a first assessment of the digital euro design. Next slide, please. I think there's a lot of aspects that still have to be clarified. And I think regarding the tremendous impact that the digital euro could have, we need a lot of impact assessments. So I think the way the legislator has scripted it so far, giving homework to the European Central Banking was a very smart way to have a transparent and open debate and to involve all stakeholders in the further clarification of the digital euro and its infrastructure. And I think I think the digital euro is a great idea, and it's a no-brainer and necessary evolution of euro cash in the 21st century and in a very increasingly digital environment. However, I just don't see the reason to rush the project. I mean, neither do we have the aforementioned situation that a private cryptocurrency solution or a stablecoin or foreign CBDC is taking over a big stake in the European market, nor do I see a digital euro use case that wouldn't be covered by the private sector of banking at the moment. So that's why, for example, the Financial Times mentioned in an article, the digital euro project is a solution looking for a problem. So you're wondering, and that's aligned with your poll answers, there's a lot of skepticism what the digital euro will be good for at the end and whether people will use it. So I would like to finish with my personal solution for this topic, which could be for the European Central Bank to explore the wholesale CBDC a bit more, because that would be the interbanking sector. It's very much more experts. You could get an idea of the infrastructure for the settlement and other aspects without enrolling the retail CBDC and endangering or having the dangers of the other aspects that I mentioned before of financial stability and so on and so forth. So that's it for now. I'm happy to answer all your questions. Thank you so much for your attention.
Thank you, Finn. Wonderful. Thank you for this elaboration and also the technical depths that you went into. I think what became clear from your elaboration is that CBDC, from your perspective, doesn't seem to be at a level where we could say this is a panacea to remedy for some initial problems like financial inclusion. I personally have the impression that there's also with you some skepticism still towards that, let's say, payment mechanism, CBDC. And I have taken some points. You see, for instance, macroeconomic risks. No? So as you've said, that LCU, the local currency, might be pressed out of the system because we have the central bank as the last lender, in any case of challenges. Well, I also like the expression when you said we have a solution for a problem that we don't know yet. So maybe also for discussion later on. But I think it is clear that there's still a lot to be done, a lot to be researched. And I think this would give the floor to Matthias already. But before we come to you, Matthias, we have one short question in the chat. Let me read it out to you. Maybe you can give a short reflection on that. what is the difference if a central bank would forbid the cash and moved all payments mechanisms to digital methods in one lucky day?
Well, that's so lucky, we don't know. I mean, that is a huge political issue in Europe right now, and that's why, very interesting point, the European Commission accompanied the proposal for the digital euro by a new proposal for euro cash, and strengthening the cash aspect, giving homework to the member states, surveying and monitoring whether access to cash is still given everywhere in rural areas and so on and so forth. So I think this is a political aspect. In Germany, for example, there are a lot of people that feel that cash is an aspect of freedom, of liberty, of the state not moving into your privacy. And so there's this huge fear of the European Union that if they go towards digital only, that anti-European parties will gain stronger larger groups of voters. And so this is a very political aspect. On a technical basis, on a technical level, there wouldn't be any difference. And I think everyone nowadays has a smartphone, so everyone should be also technically in the position to pay. But it's a very political decision, and I think we'll come back on that later on.
Yeah, thank you very much, Finn, for this elaboration. This might be the case that the political aspect we might meet today in today's discussion once more, at least. Thank you, Finn. And if you have questions to Finn, please put them into the chat so that we can take them up later in the discussion. And I would like to introduce our next speaker, Mr. Matthias Poser. He is, as I said, technical advisor at the Competence Center for Financial Systems Development with GIZ. He worked in commercial banking and financial sector consulting in Germany and in Austria. And he has an extensive experience in economic development and on the financial sector. He's keen to promote sustainable, inclusive development through financial systems development. And if I have omitted anything, Matthias, you're welcome to introduce also yourself still more. I would like to hand over to you. And I think you also would share your screen with a poll. So please, the floor is yours.
Thank you very much. So let me get set up and share my presentation. Yes. So I hope you can all see it.
Yes, we see it.
So again, hello everybody, and thank you for having me. I would like to talk about CBDC and its potential to advance financial inclusion and the achievement of the SDGs from a development perspective and from a perspective from partner countries of German Development Corporation, which is very interesting because there might be different points than from the perspective of the EU we just heard. But before we start, I would also like to start the presentation with a quick poll.
And I would take over here, right?
Mm-hmm.
Okay, thank you. Good. So the question, it's a short one. Which topic has received the most research so far? Is it central bank digital currency, or is it TED-POL, or is it modern monetary theory? So that is a result of a research, and please put your opinion. And you need to submit. Okay, results are coming in. We have 7 responses.
I cannot see the responses, so maybe keep me updated, or when I should give the...
Yes, in the chat, there should be the responses visible. It might be a technical challenge for some participants. So if you don't see it, you can also follow the results in the chat if you open the chat line. We have currently CBDC leading with 60%. And we have modern monetary theory with 33%, and we have TED-POL with 7%, with altogether 15 responses at the time as being. Okay, so it's still calibrating a bit, but matches between CBDC and modern monetary theory, while CBDC is winning. So yes, thank you for your participation. So this is the result, and I give back to you, Matthias.
Okay, thank you very much. You might wonder why I asked this question, and the reason or the motivation is to show you again what I'm gonna emphasize in the next 15 minutes, which is that the research on CBDC is still in very, very early stages and still very, very scarce. So to give you the result of this question, the winning answer would be modern monetary theory, with about 4 million results when you put it into Google Scholar. So there has been research on an extensive level. Tadpole, just as a random comparison, has about 240,000 results, and CBDC only 12,000. That means like about 20 times less than Tadpole, and that should give an idea of how early we are in the stages of research on CBDC, and especially on CBDC and its implications for financial inclusion. Okay, so having this in mind, I want to also talk quickly about the interest on CBDC. And we have seen it before in Finn's presentation too. The interest is very high. More than 100 countries have thought, developed, piloted, and even launched CBDC by now. And also we as GIZ have created a study, a gap analysis, and the result was also that the demand or the interest is very high. And for us, even more interesting was that the demand for technical assistance in emerging markets exceeds the supply by far currently. So the question is, why is there so much interest in CBDC? And this is a graphic of our research partner, the Digital Currency Initiative by the MIT. And this might give an idea of why the interest could be so high. So looking at, I mean, the answer is, of course, manifold. Why is the interest so high? But one answer could be that there is more and more the evolution towards digitalization. And looking at the options for money and payments we have currently, we have always two sides, public and private. So for money, public money, we have cash and central bank reserves, and private, we have bank deposits, e-money, stable coins, you name it. And on the payment sides, we have cash as well for on the public side, and on the private side, you basically have any digital payment channel you probably use every day. And so what this should, or what I want to show with it, is that there's no user accessible digital and public option for money or payment. And looking at this evaluation of more and more digitalization, this means that cash, so the public version, becomes less and less relevant. Is this an issue? It's a very interesting question in my point. We're not going to be able to solve it, but maybe in a discussion later. Some say yes, some say no. But looking at it from a financial inclusion perspective, it can be argued that more and more reliance on the private sector might not have the motivation to promote inclusion. And CBDC could potentially fill that gap and therefore promote financial inclusion. Looking at the characteristics between cash and we call it digital intermediary funds, so any other money and payment form that's digital other than cash, it becomes clear that both have advantages and disadvantages, looking at access, transaction time, privacy, payment opportunities over long distances, and looking at the advantages and disadvantages of both. Here also, CBDC is interesting because it has the potential to combine the advantages of both cash and digital intermediated funds. And it's important to say already here that it is a potential, and it very much depends on how CBDC is designed. Because if designed wrongly or not in the way that actively wants to achieve this, it could also cement the existing financial exclusion. We will come to that later as well. But for now, the message that I would like to get across is that CBDC can fill an existing gap and combine the advantages of both of the existing alternatives we have right now, but it needs to be designed with this intention. And here on the next slide, I want to give you just a quick visual impression of where CBDC would be positioned in the money landscape. And there you can see the retail CBDC is right in the middle because it combines it's universally accessible, it's electronic, it's central bank issued, and it's peer-to-peer. So it means you can make transactions without an intermediary. And it also, I think, nicely shows the differentiation that Finn also talked about between retail and wholesale CBDC. So summing up the groundwork and what I talked so far, I would like to emphasize again that CBDC offers an opportunity for a redesign of the existing system and add a service or an opportunity that lives beside the alternatives we have right now and can fill a gap. But as I said before, and this is very important, the danger is that if we only replicate the existing system, we could also cement the existing financial exclusion. And what I also would like to emphasize again, research is still very scarce and at very early stages. And most of what we know or what we think we know right now, especially with its effects on financial inclusion, is mostly based on assumptions and not on evidence-based research. Going into its potential to achieve the SDGs now in financial inclusion. Here's an overview, or looking at it from the potential to achieve the SDGs. I want to mention that it has ample opportunity in almost all SDGs to support their achievement. And as I want to quote here the Queen Maxima, who's the UN Secretary General Special Advocate for Inclusive Finance and Development, achieving financial inclusion is not an end in itself, it's the means to an end. And where exactly it can be a means to an end, I wanted to give you an overview here in a little bit more detail on which SDGs financial inclusion actually and actively can support their achievement. I'm not going to go through this in detail now because we have a limited amount of time, but for the record, it's in here and the potential is great. So having this in mind, and as I said before, in order for CBDC to achieve improved financial inclusion and therefore help to achieve the SDGs, CBDC needs to be designed actively to do so. So the design of the CBDC is key. And what's very important here on a general level is that it doesn't replicate the existing system. When designing it, you should consider what factors currently drive the exclusion. And from my perspective, what is always very important as well is to look at it from the perspective from the users. And the design choices Finn talked about before as well. I'm not going to repeat it, but it's mainly, can you use it offline? You have privacy considerations. Is access to CBDC possible without having a bank account? There are the technology choices. Is it supposed to be token-based or account-based? What is the nature of the intermediation? So there are very many choices that you can do. And the question is where to start. And when you, again, thinking about it from the perspective of financial inclusion, when you have this in mind, our research partner, the MIT, came up with 5 affordances of money that when designing a CBDC with the target to increase financial inclusion, these should be looked at and considered specifically. Affordances refers to what can a user do with the service and with the technology, and what enables the usage or what constrains it. And these, making the full circle kind of, these 5 affordances should always be considered comparing the intermediated and not intermediated money options. So again, in order to make use of the benefits of the existing cash and digital versions so far. Let me give you an example because it can seem quite abstract. Looking at custody, for example. In custody, you can differentiate between self-custody, like cash, you have it in your hand, you have it in your wallet, you can do with what you want with it, or intermediated. You bring your money, you put it on the bank account. And the difference is, or the deciding factor, or what you should think about is, if you put your money to a bank and use the intermediated version, it requires trusting in a third party. And this could be a problem depending on where you are or who you are. You might not access this. And what then happens is you fall back to the unintermediated version, which is cash, which means you are financially excluded again in the existing system. And this is where CBDC could potentially come in, when because you have no option, no digital option for self-custody. CBDC, when designed well, could be this option, and that could add value. And like this, you could go through the other affordances as well and think, okay, what are the pain points so far, and where could we add value? I'm not going to go through this in detail, but there's a very great report from the Digital Currency Initiative looking at this in detail. So almost coming to an end now. I want to conclude and again emphasize the 3 points that I hope I was able to transfer to you today. The first one is the positive news. From our perspective, CBDC has a big potential to improve financial inclusion. But this will not happen automatically, but only when CBDC is intentionally designed to do so. And in order to do this, you need to make informed decisions. And for this, research is still very, very scarce, as I said before. We're at very early stages. And a lot of what we think right now, as I said, is not based on evidence. And this leads us to my final point, a little bit self-promotion of our project at the GIZ. In recent years, we as GIZ have received an increasing number of requests from partner central banks, and we thought long about, okay, how could we deal with the situation? So we designed now a specific project that I'm working in that is dedicated to looking into this topic. And in the broadest of broad strokes, what we're doing at this project is, first of all, conducting research to gain more evidence on if and especially how CBDC can advance the SDGs in low and middle income countries. And the central element of this project is really to address the lack of evidence. And then we will socialize this evidence through capacity building and training of policymakers in low and middle income countries. And thirdly, we want to feed our learning into the global discourse. So I hope this gave you a little bit of an understanding where we come from and what we think about and what we're working. And I know it was only scratching on the surface, but I invite you to reach out to me also afterwards, and happy to discuss and learn from other experiences. So thank you very much for now.
Thank you, Matthias. This was very insightful and a very good elaboration on a bit different perspective on CBDC, different than Finn has presented this. I think it is clear that there are some other perspectives coming in. As a let's say, in a nutshell, from my understanding, I think your message was there is good potential to have CBDC supporting financial inclusion. But right in the beginning, in the strategic part, you need to be sure that you want to achieve that and how you can achieve that. Unfortunately, answers to these questions are not yet there, because that would be one of mine to you. What should central banks do now? But I think a lot of research needs to be invested still there. And the number that you've mentioned is very impressive. The low number, unfortunately, CBDC scoring so lowly in terms of Google Scholar hints compared to the other two research topics that you have given us in the chat. So thank you very much, Matthias. I have two questions currently received that I would like to mirror with you. Let me read them out. What is the proportion of company reliance on cryptocurrency? I would assume mentioned now. Is it realistic to expect or to rely on it over the next 10 years?
I mean, it depends on what you want, right? From a personal perspective, or from a perspective of an individual, if you want to make transactions peer-to-peer without anybody knowing what you send, you can rely on it. You can do it already, and it works fine. Looking at it from a regulator, from a central bank, from a sovereign state, you probably want to keep a little bit of your sovereignty of your currency, right? So you have an interest to be an option for digital payments, not only compared to other private offerings, but also imagine the European Central Bank doesn't come up with a digital version. It more and more moves into the digital realm, and cash is used less and less. And other jurisdictions come up with a well-working digital version, like the digital dollar or the digital yen or anything. People might be using this, and you as a jurisdiction or as a central bank, you don't want to lose this power over also policy making through monetary policy. So I think only relying on crypto, on private money could be an option, could be debated, but I think the central banks and countries have another interest as well.
Yeah, thank you. I think this is a very good point that you mentioned. And I have a second question that I would like to mirror with you. Can you clarify financial inclusion aspects of CBDC more? If we issue a digital ID and a payment instrument per each citizen, we can achieve it without CBDC.
Yeah, of course. I mean, there are many countries in the world that don't have major issues with financial inclusion, but there are areas in the world where there is an issue. And the question is, do you want to fully rely on private solutions to do that? And as I said before, the private sector might not be its first motivation to promote financial inclusion. So to have an option that goes beside the existing alternatives, also private ones, that make it easier to achieve financial inclusion through a central bank digital currency, I think could be beneficial. But definitely it can also be achieved without it.
Okay. Thank you, Matthias, for your reflections on these two questions. They might be coming more later. For now, it should be. I think an important point that you also have made was competitiveness of an economy. So everyone around your jurisdiction is going into a CBDC. And so what happens actually to you? How competitive would your economy be then when you talk about financial transactions? And I think this would lead us over to Varlam Ivanoidze, our next wonderful speaker from Georgia, the National Bank of Georgia. And Varlam, welcome as our highly valued speaker. Thank you for your time to present the Georgian case to us. Varlam is since 17 years working with high professional experience, focusing on the banking sector, risk management, internal audit, and digitalization. He currently works with the National Bank as a senior risk management expert and digitization expert for digital fintechs and also supervisory technology. He had several positions as risk manager and auditor at banks in Georgia and in Ukraine, and served on the management board of a leading retail bank, Liberty, in Georgia. So I think we will benefit very much from your rich experience, and welcome. The floor is yours. I think you also would like to start at some point of time a short poll, so please let me know, then I can walk you through this.
Yes, first of all, thank you very much, Branko. Honored to be here. Hi, everyone. And it is a pleasure to share our CBDC story with the audience and our learning so far. But to clarify from the beginning, CBDC is still an exploration for us, so we are still learning. Let me share this screen. Is it visible?
Yes, we see your screen.
And here is the question and multiple choices.
Okay, thank you very much. So we have the question, what are your CBDC expectations? Multiple choice response is possible. More alternatives for digital means of payment are available, or B, creation of new business models and products using CBDC's innovative features like smart contracts, programmability, asset tokenization, etc. The third option would be stimulate the national digitization agenda. The fourth option, enhance transparency for governmental expenditure. And the last option, fifth one, would be compliance support the wider policy objective. Please make a choices. You can do several and submit it back. Okay, so the answers are coming in. We have so far 11 responses, so we should take some bit more time. Varlam, do you see the evaluation on your screen, or don't you see it?
I don't see it.
Okay,
I just see my screen.
Yeah, the same way could be done if you go through the chat box. There is a there's a snapshot then to see how the things are developing, but I will summarize for you. We have so far 18 responses. We're probably waiting for a few more to come.
Okay.
Good. So as far as it stands, we have the first option, more alternatives for digital means of payment with 33%. That is being followed by the next two options, creation of new business models and products using CBDC's innovative features, like smart contracts, programmability, and asset tokenization, with 25% is one option. This is followed by stimulate the national digitization agenda with 22%, and the rest are following afterwards. Yeah. So thank you for sharing your feedback. The expectation would be more alternative payment means, followed by more business cases. I hand back to you, Varlam.
Thank you, Branko. Very interesting results. Actually, these expectations were from our own experience. So we started this project more than 2 years ago now, and we were trapped for some time in a role of finding problem and having solution. And one of our key learnings and observations, I think, that is that to define the reality in a proper way. And the reality is that first time in the history, regulators are kind of in the shoes of startup founders, because with the projects like open banking, open finance, CBDC as an ecosystem, they are themselves owners of innovation. And every startup founder starts its journey from asking the key question while designing and working on the product. Is it solution obsessed or problem obsessed? And it's very necessary that from the beginning of your search and product design, you need to balance between being problem obsessed and solution obsessed. That's why we spent quite a time on contextualization, because CBDC is quite technology driven innovation. That means that it brings new technologies like smart contracts, programmability, tokenization, and you need to find real use cases. You need to find the real pain points of the end user, and then you have more comfort with yourself, and life becomes easier to continue the project without having answers on key strategic questions. What are the most relevant use cases in your own context? It is very hard to work on any design. This is our key learning, and we find out that rather than to start from defining from the top the strategic goal, that we are doing this for financial inclusion, for example, or we are doing for increasing competition or transparency, we start identifying from the bottom of the pyramid real use cases. And we call our approach bottom to up, and then aggregated these most relevant use cases for the context of Georgia to the up, to the strategy. And we are doing this with the modular approach. As I mentioned already, we started the project more than 2 years ago, and it was purely research project. And we also understood that we now need to move to the next phase, which is learning by doing. Because without testing actually use cases, it's very hard to get insights. Previous speakers mentioned already that there is a lack of evidence. Yes, it's true, because it's innovative project. Prototype is not tested yet, and it's not surprising that there is a lack of evidence regarding CBDC. So that's why we choose this strategy, moving from pure research to learning by doing with the limited pilot phase. And I will elaborate on this on the next slides. So this slide shows, visualize actually what I mentioned about our bottom to up approach. We identified key stakeholders in the Georgian context. So Georgian banking sector is quite developed already, and we don't have direct financial inclusion problem, because every layer of the population, from pensioners to students, have either card or bank account to interact with the financial institutions. So we identified kind of mix of use cases and mapped these use cases with the promising technology features coming from the CBDC. For example, our budget is quite socially oriented. We have healthcare free for everyone in Georgia, and the government is spending lots of money on tenders. We thought that programmability feature and transparency feature coming from CBDC and corresponding technology would be value adding for our stakeholder like government to increase transparency of government spending. Regarding fintech, we have seen this project like bringing to the market new ecosystem for new players, because we considered our own context in Georgia. Market is quite competitive, it's already concentrated, and major banks have a big market share, and they themselves acting as a big fintechs, because they don't have legacy issues. Their servers processes are as new as our independence after collapse of the Soviet Union, and compared to the big incumbents banks from developed countries, they are quite agile to absorb the innovation. That's why they are acting quite like big fintechs, and we don't have we have already quite competitive market. And we as a regulator see our role to make basic fintech infrastructure like open banking, open finance accessible for the new players, newcomers. And as we articulate on the next slide, we can see CBDC as an enabler for completely new value chains. For example, if you think as CBDC in your thinking process, smart contracts will be in the heart of this technology. It means that you can see completely redesigning existing value chains with the programmability and smart contracts, and this gives new space to fintech companies, because you need IT company to design a smart contract interface for the end user. For example, one of the use cases we are considering and counting on is related to agro sector. As you know, Georgia is quite still agro-intense country. We have famous wineries in the east of the country. We have 8,000 years of history of winemaking, but a level of the automation in agro sector in winery is quite low. And one of the reasons why level of automation is low and costly is that agro insurance is not developed. And we thought about use cases that, for example, you have a small winery in the east of the country, and small farmer have smart contracts on insurance. And on the other side of liquidity providers of insurance, you have more players rather than only existing insurance companies. And then this risk event in this local winery is connected to some objective weather forecast in with CNN or BBC. And if risk event happens, automatically gives signal through 5G network to the insurance company, and settlements happens automatically. And a lot of middlemen from the process are eliminated, like financial transaction going through banks, or having insurance agent physically investigating the case. With this use case, you are helping like agro industry, and financial CBDC is kind of enabler for the innovation regarding agro insurance, as well as cuts a lot of middlemen from financial intermediaries. But for this to happen, someone needs to write interface which is easy to understand and user-friendly from small farmer in Kakheti. So for this interface of smart contract and connection with the insurance company, you need to have company which defines the certain APIs. This means complete redefinition of existing value chain, because you are creating ecosystem for the newcomers with this philosophy. And when we met with fintech companies, and we are interacting with them regarding this project and giving updates quite intensely, we suggested this project for unleashing their creativity. Even when meeting DeFi guys from so-called WASP community, virtual asset service provider, we attempted to make with this kind of use case CBDC, which is TradFi, attractive for DeFi community. So kind of bridging those DeFi and TradFi community with this approach. And to summarize, with this use cases and with this approach, we have quite a mix of use cases. In some cases, we have more transparent government spending. In regarding fintech, we have a complete definition of value chains, and we are inviting new entrants to the market. Regarding merchants, it has potential to decrease the merchant acquiring fees, which are quite high. And we have mix of competition goals, transparency goals, and in the end, it helps with the inclusion indirectly. So if you aggregate to the strategic goal, we don't have one only answer why we are doing CBDC, but we aggregate from the bottom to up most useful use cases. And then also to analyze more deeply use cases, we use this strategic framework, which is used in business strategy and called value curve. And value curve answers the question, what is valued by consumer? What is valued by end user? And I just illustrate a couple of cases here to show how this analysis and thinking process worked in our case. For example, we have here technology-enabled use case on atomic settlement, which is T1 in the middle of the value curve. This means that for Georgian context, for Georgian end user, this use case is moderately valued. And under this use case, you can imagine a situation when you already have 5G reality interacted with the financial system, and this 20 billion, 25 billion devices are interacting, and billions signals and transactions are sending to each other. Refrigerator talks to bank talks to car, etc., etc. And you can imagine the situation having a smart refrigerator at your home, and this smart refrigerator through 5G network is connected to the prescription of your nutritionist. and it detects automatically that the food in your refrigerator prescribed by your nutritionist reached acceptable limit, and urgently gives signal to delivery company, and delivery company brings those needed food at your doors, and simultaneously happens the financial transaction. This is called atomic settlement, and technology feature, underlying technology feature for CBDC and blockchain is promising to have those technology enabler for this kind of future. This is kind of our long-term vision, how we think about CBDC and its value. But if you ask 10 people in the streets of Tbilisi, out of 10, 9 would say that as of today, this use case is not so relevant for them, not users pain point oriented. That's why we consider this kind of use case only in long term. But it's very important to think about this kind of comprehensive interactions from the beginning, from the designing of the CBDC.
Varlam, sorry,
yes.
Varlam. I would like to ask you, please, to use 3 more minutes for your presentation, if that would be possible.
Yes.
So that we have still some time for the question answers. We have a lot of questions coming.
Sure. I will summarize soon. To contract this T1 use case, we have here in short term and for pilot actually S03 use case, which is on the middle of the on the right corner, which means that it is more valued for the Georgian user. And what we mean by this use case is smart contract enabled real estate deals. Industry of real estate is in booming right now. Counterparty, which is real estate agency, also is very interested to promote the automation in this sector. And it will be very easy to give to the end user real benefit of this use case. When they are buying or selling real estate, it's not risk-free process. Either financial transaction or real estate purchase right acquisition goes first. So it's not completely risk-free process as of now. And best alternative is escrow account. That's why it's quite obvious to have this kind of use case in the pilot, because real value for the end user comes from this kind of alternative. We have to be very quick, we have a so-called 8-point plan. We have a quite comprehensive approach to the CBDC. As I mentioned in the beginning, we are still in the process of learning. We are not focusing only on technology aspect, but we are focusing on added value aspect. We are focusing as much as possible to the legal aspects and learning from all sources. And one of the strategic places in our work is international collaboration. That's why we are part of the many international sandboxes, including when it comes to CBDC. And we are very proud that we have recently joined the BIS Innovation Hub projects like Aurum and Enbridge. Enbridge is a wholesale retail CBDC, and we joined as an observer, and Aurum is a retail CBDC. We gained full access to the technical documents and to the source code, and this is a great resource to contrast with our thinking process and to our design options. From pilot use cases, we have approach that we start with the easiest one, considering operational risks and information security risks. We start with the use case called payroll use case for volunteers inside National Bank of Georgia. Inside Central Bank, we would have volunteers which their salaries will be disbursed through digital lari, and we will test very basics programmability feature end of the day or end of the weeks. As someone wish to program, the salary will be disbursed in this way. As we see that operational risks are acceptable and we have limited the number of false positive, false negative, then we are moving to the next more complicated use case, which is related to collectible tokens. We are introducing kind of gaming feature here in this use case. Physical collectible coins are already very popular in Georgia, and we are introducing game when in order to collect one physical anniversary coin, you need to have 6 tokens to collect, and it also encourage interactions with participants. Next use case is related to real estate acquisition using smart contracts. I've already talked about this. It is also important to mention that every next use case in the pilot phase comes with new technology component. For example, we start with basics of programmability, then comes smart contracts, and then in the end of the pilot phase, we have tokenized government retail bonds, more complicated one, and bringing tokenization as a technology feature. This is what we think about pilot phases to have those 4 use cases. Where we are in the process right now is that we are actively using BIS Innovation Hub project resources, as I mentioned, not only the ones we have formally joined, but we have analyzing other projects as well. Some of them are researching the anonymity features. Some of them are more focused on the security, and we want with this approach to have kind of requirements, best practice requirements for the technology vendor, which we are going soon to choose out of 10 shortlisted companies. During last 2.5 years, we have shortlisted 10 companies out of more than 100. And out of these 10, we are going to decide who will be participating for the pilot phase and helping us test this 4 use cases for the pilot phase. And we are using this BIS Innovation Hub projects to have as best practice requirements as possible for the technology vendor and to contrast with their technology abilities. And in the end, we are very proud to have recognized our CBDC project as a ecosystem oriented from Central Banking Award this year. Thank you very much for.
Thank you, Valam. Sorry for interrupting you in the last slide, but this was a very important message you also need to make, and thank you for your elaboration and for the details that you have given. I think it's very impressive for our audience to see how the National Bank of Georgia has embarked on CBDC and to test the field, to involve the private sector already in order to make the business case, to identify the business case, the relevant use case, as we have said. And you seem to have identified very interesting ones, like social protection related, so to provide social assistance to those in need. And I think this cuts across to financial inclusion. You have clearly made a statement that financial inclusion is not the main goal, But competitiveness, would it be more? This is my understanding, no? Because jurisdictions are developing, and if Georgia is not keeping abreast with developments, then it might lose on investment potential as well. So I think these are very important points. Also concerning the climate risk management tools for agricultural smallholders, index insurance is the key word. I think this is a whole discussion by itself, so we shouldn't go into that detail now. Yes. But and also the Internet of Things, when we talk about circular economy and resilient cities, for instance. You gave the example of nutrition lists. I think there is much more to discover, and there are many more use cases for CBDC. We had some questions concerning, could you please enlarge the screen, the slide? It's a technical question. People couldn't read the slide. It was probably small. And information for everyone. We will share the presentations afterwards with everyone. So what you haven't seen, you will see then in detail. And we will also share the email contact to our distinguished speakers so that you can also follow up afterwards if you have particular questions. Let me come to some of the questions we had in the chat. One is for you, Varlam, another for Finn, and then I think we go into the round. And I hope that everybody can bear with us if we overstretch by 4 to 5 minutes maximum, because we're a bit running out of time. But we need some discussion, I think, as well. One question, Varlam, is the challenge for smart contracts the existence of CBDC or the existence of surrounding infrastructure in the country to support programming of the different business conditions?
Very good question, actually. Both is needed, I think, to have infrastructure for the smart contracts. And also what is important is you can have kind of bridging concept of Web3 with the traditional financial system with the smart contracts infrastructure in place as well, but you need either stable coin, either CBDC or something which currency which is good to be enabled for the digitally native ecosystem. And just yesterday, PayPal announced their own stablecoin, and they are positioning the stablecoin as a kind of enabler for the Web3 developer community to have their products interactive with the traditional system. So a stable coin and a digital currency can be seen as an enabler for smart contracts, but also you need also to have basic financial infrastructure in place.
Thank you, Varlam. Finn, there was a question, are cryptocurrencies likely to receive legal protection from government financial institutions, probably more the European perspective?
Thank you. Yeah, I just want to mention that lately, actually this year, the European Union has issued the markets in crypto asset regulation, which foresees certain minimum standards and also a licensing process for companies issuing crypto assets or cryptocurrencies. So if you understand protection in a way that there's a legal basis for them and that they are supervised by authorities, then yes, this is the case. Starting this year, but it'll probably take 1 or 2 more years to set up the resources with the national supervisors.
Okay, thank you, Finn. There is one question regarding the research, Matthias. I think you might have a good overview about it. So you mentioned that there's a lot of research necessary still to be done in order to utilize CBDC. And I think those case examples explained by Varlam might provide good inputs on that. However, what would be your prioritized approach in terms of planning research? What to start with first, aiming at financial inclusion through CBDC, a subject that has not been embraced neither by Finn too much nor by Varlam too much?
Sorry, thank you. Yeah, I mean, as I said, there's so few research, so basically any research in this area is good research. So so far, what I think would be interesting, and what also our discussions are with the MIT, is to like look at it from 3 perspectives, like technical perspective and what is required, what should be the base for the CBDC, the social perspective. So how do you get the people to buy in, to be involved, to actually use it? And lastly, what also Finn said, the economic and policy perspective, right? What does CBDC potentially do to the intermediation, the credit creation in a company, in a country? These are all very general points, but I think very very interesting. And also, I think we just need, which is what we also going to get soon more and more, because more countries pilot and launch, to get real life examples, because every circumstance, every distance, every country is different, and you get different results and different insights. So getting research results from the different jurisdictions who actually tested in real life is very insightful.
Very country specific, but it might be possible to cluster also some countries, so to find commonalities. Okay, thank you, Matthias. We have one more question that I would like to share with Varlam. What will be the transformation change required in a financial system and for the banks to support CBDC infrastructure, the currency itself, and so on? Blockchains.
So we are considering a 2-tier design for our CBDC project, and most central banks are considering 2-tier design for their CBDC. And it means that the financial infrastructure players are considered as participants already, and especially doing KYC and interacting with the consumer will be existing banks or fintech companies. This is one. And the another one, it depends. If you are able to position it as an ecosystem. I tried to show from the examples of AgroFarmer that new players are coming in. Then you are encouraging the smart contracts, then you are encouraging the tokenization. Existing middlemen are cut, and the value chain is redefined. The new players are coming in. So it takes time, I think, and it's very contextualized. In some countries, there is no basic financial infrastructure. They expect leapfrog effect from this, like M-Pesa did in Kenya. But in countries where you already have financial infrastructure, it will be very different case, and the regulator should drive the case based on the context, I think.
Thank you, Varlam. I think, Finn, you have a comment on that, right?
Yeah, just a quick remark. Listening to the very interesting talks by Matthias and Varlam, I think it should be more research done on the aspect whether the use cases Varlam presented could also be reached by the European approach without blockchain. Because I think the idea of the European Commission is that conditioned payments can also be used in Industry 4.0 and comparable use cases that Varlam also mentioned. So I think it would be very interesting regarding the transformation issues, whether you can have a lower threshold for the financial system to use the CBDC without blockchain and take out a lot of complexity. But I think research has to be done on that, and I don't think the European Union knows yet whether that is whether they be able to fulfill all the use cases.
Thank you, Finn, for this insight and for your opinion. I have received notice that the time is up for us. Unfortunately, I have plenty more questions. It's so unfortunate, but I think we have the opportunity to discuss this at a later stage in a different format. We will share definitely with all the participants the context, the recording of the session, as well as the presentation. And I would like to thank all of you speakers, Finn, Matthias, and Varlam, for your wonderful presentation, your reflections. I would like to thank also Ziad as a co-moderator, and Garnik for the IT, our translators, as well as you all participants for very good questions. Allow me to also highlight that we have one last webinar upcoming in the next week. This will be on Tuesday, 15th of August, at 10 a.m. Amman time, not at 12 as this one, 10 a.m. And it will be about overview and limitations on success factors for digital green finance. So you're very welcome. If you are interested, please join us again. And a big applause to the speakers and to everyone who is in this webinar. It was a pleasure. I wish you a nice day. Goodbye.